All right, everybody, this is Ryan Mallory, Stock Market Crash Update number 8. Only did one this week. It's a shortened holiday week for the stock market. Only one needed. I'll try and get back to 2 next week. But let's get down to basics here. You had a huge rally in the Dow Jones Industrial, okay? Biggest one since 1938. S&P 500 went through the roof. Russell through the roof, okay? Everybody's all of a sudden thinking the worst is behind us. But is it? Is the worst behind us right now? We're going to get into it. We're going to start looking at some charts. We're going to look at some historical context like the 1929 crash. We're going to go through about what does the stock market typically do in one of these scenarios? What kind of volatility should we expect going forward? We're going to go through it all right now. Like I said before, Dow had its best rally since 1938. I wasn't around for that. Don't know what that was like. The S&P 500, it is 27% off of its March 23rd lows. 27%. These are the kind of rallies that you see in a bear market. You don't see them in a bull market. People will say, hey, we're 20% off of lows. We've now entered into a new bullish market. That's not true, okay? People who try to put these arbitrary numbers out there and just assign it, saying, hey, now that we're 20% off the lows, we're in a bull market. No, that's just to get you to foolishly buy into it so that the street can sell you their shares at a higher price. Let me tell you how bad the market is right now. It's the worst that we've seen since June 6th of last year. That's right, we haven't even given up a full year's worth of gains at this point. Kind of crazy, right? Because there's no economy, there's unemployment that's north of 10% right now. If they were to do an actual unemployment right now, what would it be? Well, think about it. We have 17 million people that have filed in the last 3 jobless claims. That's 17 million people unemployed. Guys, we had 4% back in June. And you're trying to tell me the economy, the stock market is as good as it was back in June of last year? No, it's not. It's not. And some people say, well, Ryan, the economy isn't the same thing as the stock market. You're right, but it's a reflection of the economy. That's why we went down, because not because of a coronavirus, not because people were getting sick with the coronavirus. The stock market went down because we shut down the economy. So this is what they call a dead cat bounce. When the stock market takes this crazy rally, unexplainable, in a bear market, and it just keeps rocketing higher. Now, why did we actually go up? Because it can be explained. The Federal Reserve is pumping trillions of dollars into the economy right now. Money that it doesn't even really have. Actually, not really, it doesn't have, okay? We're just pumping trillions and trillions of dollars. We didn't even do that for the 2008 recession. So let's get into the S&P 500 here. I'm going to pull it up on the weekly chart first. This was a huge level of resistance for me this week. We cleared it. We cleared it on Thursday. We tested it 2 days in a row. We could not break through it here on Tuesday and again on Wednesday, and then on Thursday we just broke right through it. In fact, we didn't break through it. We gapped over it, okay? The stock market probably would have gone down yesterday with the horrible jobless claims number, but Federal Reserve came to the rescue with another $2.3 trillion that it doesn't have. So how high does the stock market go? Well, let's look at it on the weekly chart here. There's a resistance level right here that it could test. I think it's crazy if we get this high. If we get this high, then it's like the sell-off never really happened. I mean, we can just bounce right back and you get another rally like what we had this week. You go up another 300 points. Yeah, you'll be testing that one in no time. So that's a resistance level that you're going to want to watch going forward. Now, one thing I do find interesting is this volume. This volume is decreasing all the way up. There's not a lot of people buying into it like they were in the terms of panic that was hitting the market when it was selling off. Far less buyers. Week by week, it's getting less and less. It signals to me that there's probably not a lot of conviction behind the rally. Going back to the daily chart, we talked about in previous updates this trend line off of the 2016 lows. It has been recaptured. We went right back above it. So is this just an anomaly? I don't personally think so. I think we will go back down again. It's not a popular opinion right now. People want to laugh at people who are even saying that right now because they want the market to go back to all-time highs. They want to forget this episode ever happened. And right now, the market's rallying because the Fed is injecting a lot of money into the economy. You have a stimulus bill of $2 trillion that Congress is doing, the PPP and the EIDL and all these other things that they're doing, trying to give you basically forgivable loans. They're giving individuals $1,200, kids $500. Federal government's buying up all the bonds. You have to have recessions. You have to have business cycles. It flushes out bad companies. We might as well bail out Blockbuster. This is natural capitalism, okay? But you're bailing out airliners that deserve to go out of business. They do. They didn't prepare for rainy days. If they did, they wouldn't be asking the government for a bailout because they spent all their money buying back stocks to enrich the corporate elites at their companies so they could enrich their stock options. That's what they're spending all their money on now. The taxpayers got to foot the bill again. This is the Nasdaq. It broke right through the declining trend line like it didn't even matter this week. In fact, it gapped way above it and just kept on rallying. That was a crazy rally that we saw on Monday. I think the S&P was like up 165 points, unheard of. Yes, we had one, I think, back at the bottom here at March 24th. It was, what was it? It was like the S&P. This is the Nasdaq, but the S&P, it went up like 210 points if I recall. But still, these are insane rallies, insane. And they're not the kind of rallies that you see in a bull market. Bull market, the stock market might go up, 0.5%, 0.75%. Hey, a good day, we get like a 1.5% rally. No, we're getting like 6, 7, 8% out of the rally right now. Another update here on this 2011 trend line. It broke it a couple weeks ago when the market bottomed on March 23rd. It's rallied. It went right back above it. Showed very little resistance getting back above it, but it's weakened at this point. So if you have another sell-off here, like I expect that we will, this trend line is not going to hold up very well because it's already been breached twice at this point, both one to the downside, one to the upside. And so, yeah, it's compromised a little bit. Let's talk about the VIX. The VIX has come down the last 3 weeks. 3 weeks in a row, just straight pullback. It's not showing any life. It's not showing any bounce. If you look at the daily chart, it's kind of got like a bull flag pattern, but the volatility index is a very difficult index to really do a lot of technical analysis in the traditional sense. However, it's still elevated. It's still over 41. 41 is pretty high. December 2018 at the lows, I think we got up to like 36. This one's still above those levels. So, I mean, it's still very elevated. Typically, if it drops below 20, that's where it starts to get like more of a bullish type of mentality for the markets. Right now, it's still showing there's a lot of risk, but it's well off of the highs. You're also not seeing it peel back dramatically in the same sense that it went up. Went up, it was just like huge candle bars, right? Like right here and then right here and here. But on the pullback, you've had a couple, but it hasn't been huge. It hasn't been a huge pullback. I mean, you go back again, let's go back to 2018. Look at these candles. These were massive daily candles on the VIX. I mean, it was pulling back big time. And you've seen it many more times before in the past. Here, though, it's like it doesn't really want to. It's had a number of down days, but it's not massive candles. You have like one here, one there, and one like three. But we're also talking about at a level where it hit almost 90 on the VIX. The volatility reached a level of 90, way up there, way beyond 2018, at the same levels that we saw in 2008. But it's just kind of pulling back right now. Now, I want to go back to the S&P 500 daily chart. Volume during this whole rally has been all below average. You look at the volume during the sell-off, well above average, increasing day by day as the sell-off persisted, right? The buying has been all below average. So here's the one thing that I've noticed a lot in recent years too, is that the market tends to float higher when there's no volume. It just tends to get this like constant bid underneath it. For the bears to push this market back lower, it's going to need more volume to come on. There's not much volume out there. In fact, the days that we have seen selling, the volume has been a little bit better than the volumes on the days where we moved higher. The days where we moved higher, the volume's been very anemic. Not compared to like necessarily January of this year, but the last 2 months here in the stock market. Here's another thing that's bothered me, and you're not seeing a lot of people talk about it, but it's definitely notable, okay? You're about 27% off of the lows from March 23rd, right? The market moved up considerably this week just alone. I mean, look at this. This is where we closed out last week, 24.90. We're sitting at 27.89 in the S&P. But then you take stocks like Apple, right? These are the stocks that should be the market leaders on the way up. It's kind of lagging. For instance, yesterday, Apple was up 0.7%. Look at the S&P 500 though. Double what Apple's doing, okay? So 1.45 is our benchmark on the S&P for yesterday. Look at Google. It was down on the day. How about Microsoft? Up 0.01%. And how about Netflix? Netflix was down 0.1%. And Amazon, you say? It was slightly lower. So what does this all mean? It means that the big players are not following the market higher. They're not. These are the stocks that historically, when you have a big sell-off, like what you saw in June of last year, or when you saw December 2018, these things rallied through the roof. Okay, they led the market higher. These things are not leading the market higher. They're kind of just stagnant in some ways. I mean, yes, they've rallied, but they're not rallying big. They're not leading the way. Instead, you're getting your cruise liners like CCL. Hey, let's rally big here. We're almost double there. Let's look at Boeing here. We go from 125 to 151. That's a big move. That's like 20% almost, right? RCL, Royal Caribbean. You've got You got to move from 24 up to 40. This is what's pushing the market higher. This thing was up 7% yesterday, and Apple is up 0.7%. So it's not quality that's leading the market higher. It's crap that's leading the market higher. Delta, it actually isn't moving. And what's crazy is Warren Buffett's selling stocks right now. He's selling banks and he's selling airliners. Or how about when? Over 40% in 1 week, guys. I mean, these things are just ripping. Okay. The stock, and I'm not, when I say Wynn is a crap company, or no offense to them, okay, but come on, you just went from like 150 down to like $36, $37, okay? Yeah, market's chasing its money after these stocks here. They've just been completely decimated. Okay, there's a reason. They're very vulnerable going forward. They're needing bailouts. Okay, the casinos, the hotels, the airliners, Boeing, they need bailouts. Okay, just to keep things going. They're wanting the bailout, and that's where the money's going. They're not going after like Amazon, Apple, and Microsoft. They're discounted too. They're not discounted as bad, but they're your quality plays. Those are the ones that, okay, if this market does dip, they're not going to go out of business. Now I want to look at two charts here, okay? First one is 1929. You can see here the S&P 1929, I don't know, it was like at 30, okay? It was a lot less than it is today. It goes from like 30 down to 20. It was like a 33% correction. I think this sell-off here, we saw like a 36% correction in the stock market. But what's interesting is that it has about a 50% retracement of its losses, okay? That was on its initial sell-off. 50% retracement. Then the whole bottom falls out of it, okay? Now where are we? Check out the S&P 500. We're sitting at a 50% retracement right now, okay? So yes, the rally's pretty good. Is it totally uncommon? No, it's not, because look at 1929. We did the same thing. We saw it in 1987. You see dead cat bounces along the way. In 2008, we saw a 2-month bounce before we just really plummeted, right? So yeah, you get these dead cat bounces. It makes people think that the worst is over. But in reality, it's not. It's just getting started. And so right now, massive unemployment, people not working, pandemic that's shut down the entire world economy. You're trying to tell me we're as good as we were back in June? No. Here's the crazy thing. Let's say I'm wrong about all this, and I could be. The market does things that you never expect it to do. Okay, it's always an unpredictable beast. It surprises you every day. Well, let's say we just go straight up to all-time highs again from here. I will never short a stock the rest of my life. I really wouldn't. Why would I? If a global pandemic that shuts down the entire world economy for multiple months is just back up in all-time highs a few weeks later, you think there's a reason to short stocks ever again? Guys, I don't know what we would ever short stocks for again. It would be crazy. I've got friends that are telling me, he's like, Ryan, I don't need to hear anything about the stock market. I've got this thing all figured out. The dude just opened up a Robinhood account maybe like a month ago. Guys, there's pain in trading, especially when you don't have a clue to what you're doing, okay? People who just opened up a Robinhood account a couple of weeks ago, they think they've got this thing figured out. They think the market goes up and down 5% every day. It doesn't. These are not normal conditions. They're not. There's dead cat bounces. And don't be surprised if we retest the lows and take them completely out. These are not clean, healthy markets. The risk is important, not the profits, the risk. How are you managing the risk in this market? You don't have to get in at the bottom. You have to manage the risk though. And if you don't manage the risk, you're never going to be profitable. You take care of the risk, the profits will take care of themselves every freaking time. But you got to do it, man. You've got to manage the risk. And yes, there's a good chance that there's a lot more pain down the road for traders. And that's not me hoping for that. That's not me wanting that. It's just the reality of it. Okay, we shut down a world economy. There's going to be pain from this. We don't even realize it yet. We've been rallying the market off of hope that the Fed's coming to the rescue and going to make everything better, that it's going to put a Band-Aid on the boo-boo. So keep managing the risk. Use stop losses. Don't feel like you have to be all in on this market right now. I'm not all in. Okay, I take a position. I take a very small position. I try to build it up. I try to add more positions over time, but if I can't, then I'm not. Anyways, I hope you enjoyed this video. If you like it, please subscribe. Please like the video. Leave your comments below. I do try to respond to every comment that I get. And guess what? I'm taking notes of some of the things that you guys want me to talk about in future videos, so I'm going to do that. Probably a mid-video next week, we'll look at some more of the individual stocks and some of the plays that I want to do. But please, like and subscribe this video. It really helps me out. It helps me get the channel out there to more people, and it allows me to provide you with more content down the road. So thank you for your support, and God bless.